Hello and good weekend to all. It's Adil Fazal, market analyst at CFDs.com, a leading spread betting and CFD brokerage. Be sure to visit the website www.cfds.com, open up a trading account and start to trade with them. Certainly try the demo account initially and certainly try the other products and services. Alternatively, be sure to visit the educational website where obviously I upload charts, analysis, etc., support, resistance, and I'll be doing much more going forward. As we certainly introduce an app, hopefully, which is already launched, but we should get it up and rolling and organized in an efficient manner very soon, and hopefully the analysis will be pushed towards that eventually. Okay, so with regards to trading, folks, this is a FTSE video and European market video. Now we'll start with the obviously FTSE 100, and then we will certainly work our way towards the European markets as well. We'll try to do a basically comprehensive review going into Monday. Now, just to confirm, and I'll confirm my bias, it's always good to confirm your bias prior to hearing anybody's analysis because they could be talking their book. I'll confirm that I am short FTSE and I'm short the Nasdaq going into Monday's trading. Almost stopped out on the Nasdaq and almost stopped out on the FTSE. Very, my stop loss on the FTSE is 6407. And the Nasdaq stop is 4454 if I can remember correctly, so 52 4454. So the rally on Friday was quite impressive, and I'll discuss that hopefully in the US market analysis. I think that's the key will be in the US market analysis, but it's all about Chinese GDP numbers coming out obviously on Sunday night, and that will dictate sentiment and the movement as well. Okay, let's try and fathom exactly what's going on with regards to this market. So we had the Asian markets first of all. If we bring up the chart of Asia, okay, emerging markets first of all, you can see that the emerging markets are obviously into resistance. Previous support equals resistance, so one of the reasons why I wanted to short the markets going into Friday. Okay, if we bring up a chart of the Shanghai, okay, bring up the chart of Shanghai, and previous support equals resistance at 470. Okay, we have had this thrust high, but we have left an unfilled gap below. So given the Chinese data that obviously is going to come out tonight, or obviously given the fact that everything else has been dire, the economic data thus far out of China has been very, very weak. Even the inflation reading came out weak. Okay, so the inflation reading certainly came out weak. So therefore, you are looking at a potential gap fill based on this Chinese GDP, and obviously a flush lower. Bringing up the chart, the Nikkei, as you can see here, we put in a doji on the Nikkei. So again, given the fact that we are holding horizontal resistance as well, you have an unfilled gap below, and you also have another unfilled gap below here. So given the fact that we are into horizontal resistance, given the fact that we have had a article over the weekend, if I just bring this article up, I actually tweeted this as well with regards to lack of stimulus. Japan's finance minister Aso voices doubts on Bank of Japan monetary easing. So if I just bring this up here, you can see. Excuse me. By the way, investing.com is a very good website for news flow. So it's always good to click on news, click on Forex news, for example, economy, and rather than visiting all the numerous websites, they generally tend to have like a condensed version of all the latest headlines, etc. So Japan's finance minister voiced skepticism on Friday on whether a fresh round of monetary easing will be launched ahead of a BOJ rate review, etc., etc., citing a surplus of cash, blah, blah, blah. So any anti-QE comments are generally considered bearish, and as you can see, the Nikkei has finished more or less flat, and certainly is indicating a potential gap fill below. So given the fact that you've got a gap fill on the Japanese markets and the gap fill on the Chinese markets, and given the fact that US markets are at key resistance or inflection points, the logical way of thinking would be, from a trading perspective, primarily based on technicals that would obviously cause the gap to close before we actually attempt to thrust higher. Given the fact that we have just Chinese GDP number, and also Brazil got downgraded as well. Okay, that was another factor as well. Brazil certainly downgraded. We had Russia downgraded as well. Russia BBB minus, negative. So, and also Brazil finished financial minister Finmin Levy preparing resignation today, etc. So emerging market concerns start to resurface, as you can see here. Emerging market index fund, previous support equals resistance. So all those factors put together, and given the fact that US markets, if I bring up a chart, the S&P 500, We were struggling at 2020. We have thrust higher subsequently 2030, but given the fact that the Russell hasn't confirmed the move higher itself is a warning sign. The Dow hasn't confirmed, the Dow Transports, etc. So there was a number of reasons why I wanted to obviously attempt to short this market. You do have another key zone if we do continue to thrust higher, which is previous support equals resistance at 2040, and we're almost there. We're currently 2033. So again, the S&P is into a key resistance zone, which means that European markets are going to reverse and flush in the opposite direction as well. Okay. Now the other factor as well, we had BOE. If we're looking at the FTSE, just primarily the FTSE 100, we had BOE Forbes actually come out with some hawkish statements with regards to a potential rate rise, and that obviously doesn't help the FTSE 100 in any way at all. Okay, so that certainly creates a risk-off scenario as well. Okay, now we had Burberry profit warning, so again that was a concern, that was weighing on the FTSE and retail in general. Okay, and we also had some article with regards to banks and their capital funding requirements, etc. So again, there was obviously several bearish factors in terms of company earnings, central banks, etc. that were certainly hurting the markets itself. Okay, we also had Mr. Mester, a BOE member, Mester say she, a female. She prefers hikes in 25 basis points. So we had some hawkish comments out of the Fed from one of the Fed members as well. Okay. In terms of economic data out the US, if I can just recollect now, going back, quickly bring up my data. That was on Friday, bear with me. From the US as well, we had, just to confirm, so import prices, yes, the inflation numbers, that's one of the reasons why I was bearish as well. The inflation numbers out of the US did not come out as weak as everybody expected, therefore did not fuel the actual QE rally. Wholesale inventories, etc. Economic data from the US certainly was not dovish and did not indicate towards a dovish stance, and therefore you are looking at a potential reversal in that extreme dovish sentiment, and therefore looking for a potential short squeeze in the dollar itself. Now, if you look at the dollar chart as well, okay, this is one of the other reasons why I was actually bearish the FTSE 100. If I bring up the chart of the dollar. There we go, dollar index, yes. So the dollar itself is holding this key diagonal trend line support. Held diagonal trend line has held double bottom as well. Given the fact that everything is obviously now trading inverse dollar, given the dovish expectations of interest rates being pushed back in the US due to the dire data, etc., emerging market concerns, China concerns, etc., and given the fact that everybody expects Miss Yellen to push back on interest rates and not to cut this year, not to raise this year, etc., you are looking at a thrust higher. Okay, and not only are you seeing a thrust higher in the dollar, the Aussie and the Kiwi certainly are now potentially putting in a potential reversal. As you already know, on the fundamental analysis service, I'm swing short the Aussie. So if I bring up a chart of the Aussie itself, you can see here, this is a daily chart, and you're looking at a bear flag formation. So when the Aussie starts to top out, that means that there's certainly a risk-off scenario starting to occur. If I bring up a 60-minute chart of the Aussie, as you can see, we're putting a lower high, and we are looking to potentially thrust and move lower on the Aussie itself. We'll bring up a chart of the Kiwi as well. There we go. Okay, so you can see we put a topping tail on the Kiwi. Okay, and then a reversal candle or a bearish candle on the daily chart as well, which is a confirmation of that weakness. So given the fact that the dollar index is into support, as we all know, it's all about commodities. Okay, so given the fact that this inflation or deflation rally, call it what you want, basically, anti-deflation rally or inflation rally, basically inflates asset prices, etc., based on dovish central banks, then this is basically looking very, very bearish. Okay, so from my perspective, certainly bearish, and you're looking at potential reversal and a top on the Aussie, and therefore, given the fact that Aussie and the Kiwi have confirmed a reversal, what do you think will happen with regards to Chinese data? It's basically a confirmation that the data itself is potentially going to be weak, which will send the Aussie and Kiwi lower and the dollar higher. Now, the thrust higher on the S&P 500 towards the close on a Friday, circumspect. Okay, circumspect. So again, we shall see, given the light volume, distortion, or manipulation that generally tends to occur on a Friday, we'll see exactly whether or not that price action confirms that move, and we shall certainly find out whether or not the markets certainly have turned bullish and the S&P has broken out. Okay, now looking at the market from a technical point of view now, starting with the FTSE itself, the volatility index is the key from my perspective. The volatility index has held double bottom intraday and put in a bottoming tail. Okay, looking at a 60-minute chart, the FTSE volatility again has held double bottom. So given the fact that it's held double bottom, I am expecting the volatility index to thrust higher, and therefore the FTSE 100 to certainly turn lower quite substantially. So if we go to the FTSE 100 chart itself, okay, and going to a weekly chart, let's see where this market finished. Weekly chart confirmed that key resistance at 61% on the FTSE 100. As you can see here, previous support equals resistance at 6430, and that's exactly what the pivot top potentially was. Give and take the wick that we had as high as 6450. So 6450 is the key. Now 6430, 6450, if we close above that, then obviously you are looking at a potential short squeeze, and you're slamming right into the 6500 level. Previous support equals resistance again at 6530. So there are the two zones that you'll be looking at. Obviously the fib 75% is 6550, so again that can certainly come into play. Given the fact that we have this major HNS formation, as you can see here on the weekly chart, okay, there's your HNS. We're attempting to retrace now based on this expectation that the Fed is going to be dovish and push back, which I think is unfounded. I can't see how Miss Yellen is going to renege and retract with regards to and also jeopardize her credibility, etc., etc. So I see the fact that Miss Yellen will raise rates, dollar goes higher, which you've seen is into support, and that obviously sends the FTSE 100 on the weekly chart certainly propelling and thrusting lower. Now, with regards to the daily chart now on the FTSE 100, if I just bring up the chart of the FTSE on a daily basis, you can see that the previous support equals resistance has held well at 6430. We've obviously bounced off previous resistance equals support here at 6250 region. It's been a minor bounce, okay, nothing quite substantial, no conviction, even with the US markets thrusting higher, etc., etc. The FTSE itself struggled to go past the 6400 level, okay, hence the reason why I was weak. I was bearish on the FTSE. Now the 60-minute chart, we did have a HNS formation at one point. You just bring this up for you. We had this HNS formation. Given the fact that China obviously pushed higher overnight, that HNS was negated because we regained the neckline itself, and we started trade above it. So for now, horizontal resistance holds at the 6396 level, and as you can see, we certainly held that pretty well. And now we are looking for a potential move lower. Now, given the fact that you've got the fib high to low into the fib 61 to obviously 75% resistance, if the market does push high above there, then obviously 6450 is back into play. The support zone is at 6250 below, obviously 6270, which we've previously hit already once. Okay, they are your key support zones. You have 6300 at support on the downside, and obviously 6245, then 200 MA, and the previous resistance equals support at 6170, 6175. They are your zones. Now the whole key is whether we can hold this lower high. Okay, we have not, and we did not make a higher high. This is a lower high, therefore indicating exhaustion, given the fact that we've had this thrust higher. Just using your basic concept of TA, higher highs and higher lows, higher high, higher low, and as you can see, we've certainly exhausted that aspect for now. And the markets, you have a rising contracting wedge pattern. So if you show you this, as you can see here, rising contracting wedge pattern, we've broken out. We had a HNS, perfect technical formation reversal. Obviously central banks and Asian markets had other ideas, and we started to thrust higher as well. So given the fact that we have Mr. Forbes in terms of the FTSE 100 hawkish, that's certainly not a good sign for the FTSE itself. Given the fact that Chinese GDP data is more or less going to come out on the weak side, it's very hard to justify any potential move or thrust higher on the FTSE itself. Now, looking at the FTSE, particular individual sectors, one of the reasons why I'm bearish the FTSE, as you can see here, we've had this thrust higher in oil and gas, and it hasn't really materialized. You can see that that's confirmed with regards to oil and gas on the oil chart. So if I bring up a chart of crude oil, before I do that, I'll just bring up a chart of copper. You can see copper itself has exhausted as well. Bearish engulfing candle. Now that's no coincidence, given the fact that the dollar index is obviously into support. Aussie and Kiwi, as I've already explained to you and showed to you, that the Aussie and Kiwi obviously are into resistance and are potentially putting in a reversal. So given that all those factors are into play, then given into market analysis and the edge and the hindsight and the foresight that you have from intermarket analysis, then you know that the Chinese GDP data will be nothing but bearish. Okay, hence the reason why my bias was bearish on Friday, and I was proven wrong to a large extent. So I'll accept that, but we'll see whether or not I get stopped out and which way the market gaps open tonight. Okay, so the copper itself, as you can see here, certainly showing weakness on the 60-minute chart. You're putting a triple top, and given the fact that the dollar is obviously confirming that now. Gold itself obviously has started to reverse as well. You can see here putting a potential high, looking for a reversal. And the same thing with regards to crude. Now, crude is interesting. Why? Because it actually gave back all its gains. The thrust high that we've seen up to 51 was basically negated, and we neutralized everything. And we dropped back to 45 where we started. Okay, that's not a good sign. Having said that, it's actually retraced now itself from 45 to obviously into the fib 38% resistance, and therefore that is the key resistance zone for now. But certainly not a good sign. Okay, not a good sign from my perspective. Certainly indicating and showing weakness still. And obviously the economic data out of Germany and Europe overall has relatively been weak. Okay, and so therefore, fundamentally speaking, at present, the oil price is only helped by geopolitics in Syria, and hence the reason why we gave back the majority of it. And there's no real organic growth there there's no growth story from a large extent, especially with the weak data out in the US as well. There's no real growth story that can propel the FTSE, propel oil. The only obviously two factors are, one, supply constraints, okay, whether the oil rigs continue to fall, whether the Saudis cut back on production, or OPEC comes to some sort of agreement in terms of cutting production and artificially inflating the prices by controlling supply and demand, or obviously geopolitics. Okay, and then Syria certainly seems to be a key component of that, given the fact that the Russians are now involved and the Chinese are involved in that region in the Middle East. So that certainly does not bode well, and from a long-term perspective, I would certainly be buying oil at this juncture based on geopolitics alone. Okay, and obviously the possibility of OPEC stepping in, given the fact that the Saudis now and the Russians are certainly hurting in terms of their balance of budgets in terms of oil. Okay, so the actual chart of oil, which I've already shown you. Now let's cross-reference that with the FTSE itself. Now, as you can see, 60-minute chart, lower high. If I go to a 10-minute chart, the FTSE give you a better understanding. You have this H&S formation. So this is basically one of the reasons why I was short the FTSE itself, looking at this chart here and looking at potential reversal. So that's basically what I would expect going forward. Potential lower high, and then obviously a thrust lower. Okay. Given the fact that we've held that 6,380 resistance, and that's going to be key. Obviously, if we break above there, 6,400. Hence the reason why my stop loss is at 6,407, because once we break above there, then obviously 6,450 is back on the cards. It should be interesting how the markets trade now. Okay, FTSE 250, just to cross-reference the FTSE 100 as always. If I go to, before I do that, the mining sector, by the way, as well. As you can see here, mining sector failed bull flag, and you're certainly seeing weakness. So we are looking for a potential thrust lower on the mining sector. Retail, as you know, with regards to Burberry warning, etc., that certainly has set that back, and you are looking at resistance on the actual retail sector itself. The banks certainly have showing signs of exhaustion. Obviously, we've held that resistance zone now on this key level. It needs to certainly be watched. We're in this zone and trading sideways, so no real breakout here that you could certainly argue you're looking for a move on the upside. Okay, now with regards to pharmaceuticals, that's probably the only, I mean, you can see here that the beverages sector certainly is into resistance. The pharmaceuticals were the key drivers on Friday, given the fact that we had this talk with regards to Shire, etc. Okay, so again, this is something that we are going to watch quite carefully. This is what's been lifting the FTSE itself. Given the fact that that bid or talk of speculation and bid, etc., is helping it for now, we shall see exactly how high it can sustain itself. But given the fact that that's only one index, we are looking at other sectors as well to propel the FTSE 100. That certainly needs to be taken into consideration as well. But that certainly is a factor that's propelling the FTSE higher. So again, we need to look at the market independently and objectively in order to truly attain its direction. Inside bar on the telecoms as well, FTSE Telecom, so again indicating weakness from my perspective. And given the fact that we've got the unfilled gaps on the Asian markets as well, that's going to be key. FTSE All Share, you can see again struggling here off this previous resistance equals support. Again, we're on the FTSE 100 Euro, we are back into resistance. So everything is indicating resistance to me. FTSE 250, obviously we got flushed quite substantially, and the daily chart certainly remains weak. And you see here we had an attempt to go higher, then we put a top in tail, and the FTSE 250 looks like it potentially wants to reverse. So again, all the indicators here are certainly pointing for a move lower. Now zinc itself did rally higher, and that helped Glencore. It's actually fallen ever since. Let me just get rid of these pivot points. Okay, it's fallen ever since, so certainly holding that resistance zone, so no real move there. Given the fact that we did look at Glencore, and Glencore certainly seems to be some sort of risk barometer in this market at present. Let's just bring up the chart of Glencore, see exactly what's happening here. Ever since we hit the 75% and putting that topping tail, the Glencore shares certainly have been moving lower. Now, Glencore has an unfilled gap below, so again, that's an argument for Glencore to certainly close that gap, given the fact the dollar is rising, commodities are falling, and therefore you are looking at Glencore closing the gap below. And that in turn obviously will send the FTSE 100 lower as well. Okay, so these are all factors that we're going to watch with regards to the FTSE. Now, going back, I did say that this was going to be a European market video, given the fact that it's already 20 minutes and I've only discussed the FTSE 100. I think I'll leave this as the FTSE 100 video for now. I'll discuss Europe when I do the other video for now. Okay, so European indices, resistance 6380, 6400. Everything's about China. China will dictate. Okay, Asian markets will dictate. But given the fact I've given you the sell, dollar into support, Asian markets unfilled gaps below, European markets into resistance, US markets into resistance, and the rally late Friday is certainly circumspect. But again, it's all about China. Okay, all about China. If China, the data itself slightly beats high in terms of expectations, then that will certainly help risk, and the markets will potentially move lower. Or alternatively, if the economic data is stellar in China, that obviously reduces the need for stimulus, and therefore obviously stock markets fall because everybody's on the Kool-Aid. Okay, multiple outcomes. As traders, we react. We can only preempt to a large extent, given intermarket analysis gives you that ability, but even then we are reactionary traders. Good weekend to all. I think that's a wrap. Be sure to visit www.cfds.com for your trading needs and www.cfds.education for your educational needs. Goodbye now.